Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 8th of November. Now there was a really interesting reaction on markets to stronger than expected payrolls report on Friday. You would have thought that would have been yield positive, dollar positive, but in the event we actually saw a reaction that was complete opposite to that. The dollar fell away and yields also fell away as well. So it seemed as though there's been a bit of exhaustion in this trade that we've seen of the dollar strength maybe over that last few weeks, and maybe there's a sign of a near-term turnaround. Be interesting to see how this one develops early this week, but at the moment markets are sort of teetering on the brink of which way to go on that. So it's something that we're going to be keeping an eye on, I think, early this week. Not a lot of data out today, just some Fed speakers on the agenda. We've got Fed Chair Powell who's speaking today, and there are also three others as well. So we'll be looking out for any shifts in market expectations there, or if they're just trumping out the same line of what we've seen previously. So for the for the charts we're looking out for today, we're actually looking at these potential rallies on Eurodollar and Aussie dollar to show the fact that the dollar is potentially on a turnaround moment. So we're going to show you through those, but also looking out for the gold chart as well. Big reaction higher on gold on Friday, again against what we would have expected. But how's that affected the outlook for gold? So let's have a look. And onto the Infinox MT5 platform now. Just starting off with Eurodollar, we can see that the market fell away. It actually had a downside break of the 1525 level of support. And that level of support, actually, if you open this one out, goes all the way back to July last year. So there's an interesting breakdown that was actually false in the event, but it's not necessarily yet decisively turning around. There was a positive candle that we saw on Friday, and the market is just consolidating today, really. If you look on the 4-hour chart, you can see this slight head and shoulders reversal that we're potentially now growing. You can see it actually better on the hourly chart here. The potential base pattern that market is now testing. Now, the question is, how's the market going to be reacting around back on the daily chart? You can see these old levels of support, 1570 to 1585, old levels of support which are now resistance on a rally scenario, and we can see that starting to now come in. So how the market reacts around 1570, 1585 will be key near term. There's a potential little rebound that we could see on Eurodollar. You've got the resistance overhead at 1615 area. So the resistance is overhead, but the market is just consolidating early today. It'll be interesting to see how that responds, because there was a big turnaround that we saw on Friday on the initial breakdown on the payrolls report, and then a rally that really changed the complexion of this chart near term at least. And just looking on the Aussie, we've been falling over on the Aussie, negative candles falling away, but there's a rebound on Friday. We can see that on this 4-hour chart as well. And again, another instance where if I drill down one more level at the 1-hour chart, you can see this head and shoulders reversal potential here. Now, what I am doing at the moment, I'm still running a short position on the Aussie dollar. I've just changed my stop loss, changed my profit trigger now to 74.20 area, just to potentially capture or protect against that rebound. But it certainly still looks corrective, but is it going to continue corrective is the question. I think that resistance at 74.10 will be telling on that one, but at the moment I'd be still looking to sell into strength on the Aussie. And finally, on the gold chart, again, another chart which reacted in a strange way on Friday. There was a downside move initially on the payrolls report, and then there was a big turnaround that we saw. Initial downside move, and then a big rebound on gold that took gold through key resistance levels, 1800 to 1810 bucks. Really key level of resistance that had been holding for several weeks, really, and decisive move through that. Now the question is, how does the market respond to this? Well, you've got this downtrend that you can just see the top of here. If we zoom out one more level, a couple more levels actually, we can see the importance of this downtrend that gold has been in since August 2020. So this is a really important moment. How does gold react around that downtrend? Well, the RSI is at 60 again. That's the point at which that started to curtail the rally previously. So is this the moment that gold can shift that momentum once more and really break clear. Holding above 1810, $1,800 is important. That's now old resistance is new support. So that is now what the bulls will be looking to do, to build from that level. But can they now start to break through? Well, the RSI moving above that 61 area would be important. That would help to improve the momentum and really suggest that a recovery towards that 1834 level is going to be holding. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where it is a quiet week, but you do have the important US CPI inflation data that we'll be looking out for. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much.